Choosing the wrong business structure can cost you clients, it can cost you funding, and even legal protection. But in today's video, we're going to fix that. In today's video, we're going to be talking about the different types of business entities in Nigeria. And after this video, you're going to know which of the business entities will be best suited for your business before you start. So let's just get right into it. Hi everyone, it's your legal bestie here, and I'm Legally Joy, and I help businesses stay compliant. And on this channel, we talk about everything legal. So let's get right into the video. The big question is, what type of business structure exists in Nigeria? What are the different types of business structures that are acceptable in Nigeria? There are several recognized business entities under the Companies and Allied Matters Act. Now, choosing the right one will now depend on your business goals, your ownership, and then if you want to also scale up. The first type of business entity in Nigeria is also what we call the business name or sole proprietorship. Now, this is a business that is owned and run by one single person, and this type of business is best for small businesses and for solopreneurs. It is cheap and it is easy to register, and the owner bears full liability of the company. That means the owner and the company are one and the same thing, and it's suitable for small businesses or low risk businesses. So if you are testing a business idea, you are a freelancer, or you're starting small, then this particular company is best for you. The second one is what we call the limited partnership. Now, this is a type of business entity that is owned and run by two or more individuals. The limited partnership, there is also the general partnership, limited partnership, and a limited liability partnership. Now, the general partnership is where partners share in the profit, the losses, and the liabilities of the business equally. Now, the limited partnership includes both general partners with unlimited liability and limited partners whose liability is limited, by their invested. So the limited partnership is also a combination of the general partnership as well. While the limited liability partnership, which is also called LLP, which is what you see in the Corporate Affairs Commission and under CAMA, is a partnership where it is limited to their investment and the business is a separate legal entity. If you're thinking of, you have somebody or a friend that you want to go into partnership together, the limited liability partnership is best suitable for you. So you can use this if you're starting a business, with a trusted partner and you want shared responsibility clearly specified, and also the fact that, the partnership is also a separate legal entity. The third one is private company limited by shares, also known as LTD. Now, this is the most common type of company in Nigeria, and in my last video I explained it very clearly in just 2 minutes. So I'm going to put the link in the description if you want to watch that video. Now, with this type of company is where the liability of members are limited to the amount of their shares or the amount of their share capital. So it depends on whatever share capital any shareholder has, will depend on that share capital is the extent of their liability or debt to the company. And also they have also a separate legal entity. So a limited liability company has a separate legal entity. The shareholders limited liability is limited only to the amount, that they contribute to the company, and it's ideal for, SMEs and startups, that is, small medium enterprises and startups. So you can use this if you are building a serious business with partners and you plan to grow and you intend in the future, to have investors. So the fourth type of business entity in Nigeria is a PLC, that is a public company. A public limited company is among the types of company that can be registered with the CAC in Nigeria. Now, this business is suitable for large companies like banks, and shares are traded publicly on the stock market. So this type of business is the kind of business that is best for, multinationals or big company who have, been running their business and they also want to scale up. Now, the law requires a PLC to annually publish their financial records for the sake of accountability and transparency. They are also subject to stricter regulations like, the SEC and sometimes CBN. So shares are also offered to the public, so they can publicly, outsource their shares for people to buy. And this type of businesses can be registered, by a minimum of 2 adults. They can even have, as much as 50 shareholders or 100 shareholders. Now, the fifth one is what we call the company limited by guarantee, also known as GTE. Now, this type of company can be referred to as a non-profit organization, and they are registered for the purpose of promoting art, culture, commerce, religion, research, or sport. So they are in between, an incorporated trustee, which is, a not-for-profit organization. This except that, for a limited by guarantee, they are used to promote commerce, they are used to promote art, used to promote culture, anything like that. Now, they don't have a share capital, and the guarantors don't claim any profit. They are allowed to do business, but the profit must be, for the promotion of their main object, which is, to promote maybe art and culture. And the liability of members are also limited by, the amount they undertake to contribute, in the case of the company's debt. So what happens is, the trustees or the directors will, state that, they want to contribute, let's say 100,000 naira. Let's say one of them decides they want to contribute 100. They will only be liable, assuming it runs into debt, as to the amount they agreed to contribute. So ultimately, all the income of the company, or all the income that the company generates, is utilized, in covering operational costs and achieving, its objective. Now, the last one is what we call incorporated. So the last one is the incorporated trustee. This type of business entity is not a business organization, but it is a non-governmental organization that consists of one or more trustees appointed by a group of people, that are bound by the same religion or custom. They include churches, mosque association, clubs, or NGOs. Now, trustee, there are no share capitals or no shareholders, but it is run by a board of trustees. There are trustees, which include the chairman and the secretary, which, operate or run the affairs of the organization. So every business entity generally has its advantage and disadvantage. Now, the key is to pick the one that matches your business vision, not the one that is cheaper to register. So if this video was helpful, don't forget to subscribe and put on a notification bell, so each time I post a video, you get notified. If you have a question on any of this business, or you need any assistance in regards to how, to register any of this business, you can click the link in the description. I have a free starter kit there that can help you know where you can start for, or the requirements, for registering any of these businesses in the description. Thank you guys for watching. Until I